we're here to bring a new type of news show.
New insights, new styles, and new topics every day.
We are News Generation.
Bringing news just for you. It's Tuesday, May 26th here in Seoul. I'm Isujin, and this is News Generation. And joining us today is Kyun.
Thank you for having me.
For coming in, the Moon is with us.
Good morning.
To have you, and both are here to speak on behalf of people in their 20s and 30s. So we're kicking off the work week with the perfect debate for workers looking for a little bit of Tuesday motivation, a classic would you rather game, and today it's going to be all about money. So, would you rather take a guaranteed 100 million Korean won, around 70,000 US dollars in cash, or risk it all for a 50% chance at winning 1 billion won, which is roughly $700,000? But there's a catch. If luck isn't on your side, you end up walking away with absolutely nothing. So, Kyun, do you want to go first?
Wow, that's a tough one, but free money sounds really good, as always. But one thing for sure is that I'm not really good at gambling and not the type to really take my chances and trust my luck. So my straight answer would be to take the guaranteed 100 million won. I mean, it's still a big money, right? But as much as, the 1 billion won looks very tempting, I think something from nothing sounds more appealing than all or nothing. But I'm thinking of suddenly just having like $70,000 in my pocket. Wow, I would definitely invest half of it and use the rest on probably traveling, because I haven't traveled in a while and I really want to travel. But I think, money's always good. But if you think of it as like gambling, like all or nothing or double down, it gets really like a little too much for me. Like I get too nervous and it becomes really stressful as well. So I like to take the safe option.
No, I can relate to that because I think people who take the other option means they're okay with not getting that money.
I'm not okay with that.
I'm not okay. Munji, what about you?
All right, so it's safety versus gamble, right? Anyways, just makes me smile. But I would choose the 50% chance actually, because whether it's 1 billion or 100 million, it wasn't just my money at first to begin with. So I think if it's the money you never had, I don't think I'm losing anything even though I walk away with my empty hands. So I think I could take it easy with work if I get a 1 billion won, or not, I could just work a little harder. So I think I would go gamble some and with the 50 chance. Yeah.
I think that's one way to look at it as well. So we're going to talk more about this, but first let's take a look at the screen. South Korea's stock market has been hitting record highs, drawing in a growing wave of investors eager to cash in on the rally. For many young people, investing is no longer just a side hobby. It's seen as one of the few chances to build wealth quickly, with some even taking out loans to buy stocks. Today on News Generation, we take a closer look at why so many young investors are diving into the market, the risks behind Korea's investment frenzy, and how to invest more wisely in an era of hype and volatility. Just as we saw in a video, that balance game was really a test of how much risk people are willing to take, and investing styles aren't all that different. Some people prefer safe and steady returns, while others are willing to gamble big for the chance at that massive payoff. So how intense also has Korea's stock investment boom become recently, Kyun?
It is quite intense. It's very hot right now, and a lot of people are talking about the Kospi. It's been making the headlines in the global equity market from this year up until even today, breaking historical records almost on a daily basis. Now, the Kospi momentarily surpassed the unprecedented 8,000 mark during intraday trading a few weeks ago. And even today actually broke the 8,100 mark, I think, for the first time ever, further highlighting the intensified bullish market. Now, this investment frenzy has actually led to a surge in debt finance investing, known locally as B2 or leverage investing. Outstanding unsecured loans at South Korea's 5 major commercial banks increased by more than 1.8 trillion won in May alone. Meanwhile, if you look at the screen, the total outstanding balance from P2P lending, meaning borrowing or lending money directly among individuals, bypassing traditional institutions like banks, grew 7.5 times compared to a year earlier. So in the midst of the Kospi boom, more people are actually borrowing money to invest with the hope of making, I guess, probably more than their salary, which means high risk at the same time.
Right. I also actually read an article yesterday about how the daily average transactions surpassed 90 trillion Korean won.
90 trillion
Which
Korean
is an
won.
insane number. So more people are even just, that's why they're borrowing money just to invest. And as investing fever continues to spread, it's also creating some unexpected trends due to anxiety and uncertainty. So what are then some unusual trends are emerging from this investment boom?
Yeah, one of them is like with the investment craze continuing, particularly among the younger generations, we are seeing a trend called shamanism investing, which is very surprising. People are increasingly visiting fortune tellers and tarot cafes or seeking out destinations known for good financial fortune, such as Gwanaksan or Inwangsan. Given the high level of uncertainty in the market, these practices are essentially being utilized as a tool to relieve psychological anxiety. In fact, the fortune-telling industry has recently seen the emergence of counselors who specialize exclusively in stock market. So furthermore, services that analyze the compatibility between specific industry sectors and an individual's personal fortune, and currently seeing a massive boom. Indeed, the market size has been expanding recently as a proof that shamanism investing is highly trending among investors. Yet, experts are sharing concerns that such a type of investment might instigate dumping strategies, so you really have to be careful with this.
Right, so that really shows how emotionally intense investing has become for a lot of young people. And beyond the numbers, many say this stock craze is now showing up everywhere in daily life and also in pop culture. So how is the fervor around stock investment showing up these days?
I think it's everywhere in Korea.
Right.
It's definitely the talk of the town. I hear it from workplaces to coffee shops, even among my friends. When we have a conversation, we talk about the stock market at least once and talk about the prices of Samsung Electronics and SK Hynix, as they're the two main kind of stocks in the AI industry, and that's what's driving the Kospi up in a bullish market right now. It's on the news almost every day, even in Arirang, popping up in social media. So it's really hard not to miss and not to talk about, especially when you see feeds of people showing off how much they actually made. Even your friends or friend of a friend, and then you suddenly feel like, oh, you become very jealous. You're like, oh, maybe I should jump on the bandwagon as well. And you see a lot of people who started just investing now because everyone else is talking about how much money they're making. So they're like, oh, I don't want to miss out. And they start investing without having much knowledge. And they could be the ones not making money and thinking, oh, how come I'm not the only one who's making money? But then with investing, you need a lot of practice, patience, and of course, study as well. You need to have a lot of knowledge and it takes time. So just because everyone else seems to be making money, it doesn't mean you can make money as well. So you need to be really careful with how you invest, where you invest, and it's all about timing as well.
Right, because there's so many you only hear success stories, so
yeah.
it's easy to kind of forget that. So what about you? How else is it showing up?
Yeah, I think, if you really want to know what the public is most focused on these days, I think one of the best way to look at is watching TV broadcasting programs, by nature a medium designed to capture the attention of the masses, that is broadcasting. So it has to stay highly tuned into the trends of the times. In that sense, it's no surprise that we are seeing a surge of parody videos depicting the stock market frenzy on shows like SNL and various web variety programs. The fact that this topic is dominating shows with predominantly all age-round audiences shows proves just how deeply our stock market is impacting everyone today, I think, regardless of age or even gender.
So it almost feels like stock talks have become a daily routine now, and that raises a bigger question about why so many, especially young people, feel so drawn to investing in the first place. So why are so many young people obsessed with investing?
Well, according to experts, they say the boom in debt-fueled investing is being driven by a growing sense among young people that this may be their last real opportunity to build wealth. Now, in the past, even those struggling, our parents' generation mostly, those struggling financially still believed the economy would continue to grow, which it has, and stable jobs provide a foundation for economic independence. But unfortunately, in today's situation, younger generation faces a very different reality. Home ownership, once considered the cornerstone of personal wealth has become increasingly out of reach. Wealth inequality has widened, and with high inflation and high cost of living, many actually feel that relying on wages alone is no longer enough to build meaningful assets. Therefore, they start investing, but then with high risk. They think, oh, high risk means high return, but at the same time means high losses as well. So I think many people need to be careful when they invest, and we're going to hear from an expert very soon about how to invest better. Yeah.
Right. So for many young people, investing no longer feels optional, and on top of that pressure is also a growing fear of being left behind while others make money. So what are some other factors that are fueling this frenzy among young people?
Yeah, right. The FOMO, which is fear of missing out. That this is the anxiety of being the only one left behind in such, highly profitable stock market these days we are experiencing right now. In fact, during the real estate boom while ago, the term sudden beggar kind of emerged. It describes the phenomenon of becoming relatively impoverished overnight, doing absolutely nothing while the assets of others have skyrocketed. Furthermore, as consecutive real estate regulations have made it increasingly difficult for the younger generation to scrape together every single pennies they have to buy a home, and many have pivoted to stocks and cryptocurrency. However, because young professionals often lack substantial seed money, this shift has inevitably led to debt-financed investing. There is also a growing trend toward a short-term day trading, fueled by the desire to make a short-term small profit while the market is very hot.
So that fear of missing out can be incredibly powerful, especially during a bull market. And whether they invest or not, many people say it's hard not to be affected by all the stories that you're hearing surrounding stocks. So have you personally felt influenced by this investment boom or these stories that you're hearing?
Of course, definitely. I actually had two close friends of mine. One had invested from years back, steadily buying on one single stock, while the price was extremely low actually compared to today. That stock actually became a 10-bagger, which means that the return became 1,000%, or the amount of the initial price actually increased by 10 times.
Was it one of the two tech
Yes.
giants? Okay,
My other friend chose leverage investing, which is obviously very risky, but he actually did end up making some sort of profit. Now, looking at these two friends, I was thinking, what about me? Where do I stand? Nowhere. I was like kind of stuck in the middle, seeing both friends make money. I was like, oh, peapa. We say that in Korean, when you see other people do so well and make a lot of money, you're like, oh, I'm so jealous. So I thought, what should I do? It's too late to start investing and look 10 years later. Am I going to take a loan? No, I'm too, I'm too scared to actually take out a loan. I'm not a real gambler as well. So I thought maybe I should just do more study and pick out a very, very profitable company and invest long term so I can make profit in the long run. So I kind of changed my mindset looking at these two friends.
No, I didn't know so many people had been investing until recently, where it seems like everyone around me has made profit.
Do you know why? Because when they lose money, they don't talk about it. They only start talking about bragging it when once actually they start making money.
That's what I need to tell myself, because right now I can't even afford a watch. I'm trying to get a smart watch. And I'm like, I probably need that.
Mom, are you listening?
I was like, I should have invested in that.
Oh, okay.
So what about you?
At the very beginning of the show, I kind of explained why I would gamble with the money, but I don't gamble with my own money. So I kind of like...
Use someone else's money?
Yeah, it's someone else's money. Or if it's a free money, I would gamble, but with my money, I would never do it. So that's why I don't invest these days. But there are very many instances I really get tempted to do some investing in the stocks. If I felt confident that the current market trends were stable, and I might seriously consider it, but I don't think I am kind of very confident I would make some profits, and it's too expensive for those stocks. I could make possible profits, so I think that's why I don't currently invest in stocks.
Right, so this shows how investing today is a lot more also psychological as much as it's financial. And with so many people jumping into the market, the key question now is how to invest without getting swept up in the hype. So to get a more in-depth perspective on this, we're going to talk to an expert, and that conversation is going to take place right after a break, so don't go anywhere.
NewsGen wants to hear from you. Go to YouTube and search out Channel Arirang News. Click Posts and cast your vote in the poll. Make a new type of news with us.
Joining us today is Professor Pang Mingjung from the Department of Business and Administration at Kumu National Institute of Technology. So hello, Professor. Thank you so much for connecting with us today.
Good morning. Thank you for having me today.
So, Professor, how does today's debt-driven investment trend that we're seeing among young Koreans compare to the investment trends from the past?
Yeah, in the past, young people in Korea tended to prioritize stable employment, savings, and long-term asset accumulation. However, today's younger generation faces a very different economic environment characterized by soaring house prices, high living costs, and stagnant wages. This is relative to asset inflation and intense social comparison amplified through social media. As a result, many young people feel that traditional pathways to wealth accumulation are no longer realistic. This has led to these days a stronger tendency toward leveraged investing, where individuals use loans or debt to invest in assets such as stocks, cryptocurrencies, or real estate. Compared to previous generations, these days investment decisions today are faster and more technology driven and heavily influenced by online communities and digital platforms. So in these many cases, investment is no longer viewed simply as wealth management, but as a perceived necessary for survival and social mobility.
Thank you, Professor. What risks does this investment frenzy pose to society and individuals?
Yeah, the risks are significant at both the individuals and social levels. For individuals, excessive debt in debt-based investing can create severe financial instability. If markets decline sharply, young investors may face heavy debt burdens, psychological stress, or reduced quality of life, and even long-term financial exclusion. In extreme cases, failed investments can affect career choices and family formation and mental health. From a social perspective, speculative investment culture can deepen inequality, weaken trust in productive economic activities. When rapid speculative gains are glorified, people may undervalue long-term skills, innovation, and sustainable career development. Moreover, widespread household debt increases systematic financial risks and can negatively affect consumption, economic stability, and social cohesion. Also, another important concern is that algorithm-driven information environments and social media can amplify herd behavior or misinformation and emotional decision-making, leading to irrational market bubbles.
Yeah, I see. So, Professor, our last question for you today is, what kind of advice would you give young people on wisely investing?
The important thing is that first, investing should be approached as a long-term process of displaying asset management rather than a short-term gamble. Young people should avoid making investment decisions based on solely on fear of missing out, we call FOMO, or social pressure. And second, financial literacy is also extremely important. Before investing, young people's individuals should understand risk diversification, cash flow management, interest rates, and the basic principles of financial markets. Borrowing money to invest can magnify gains, but it also magnifies losses. Therefore, leverage should be used very cautiously. And finally, the most important thing is that successful investing is not about chasing quick profits. It is about maintaining rational judgment, emotional control, and long-term resilience even during uncertainty and market volatility.
All right, thank you so much for sharing your take on this, Professor.
Thank you.
Thank you.
Thank you.
We just spoke with a business professor about how today's debt-driven investing trend among young Koreans differs from the past, the risk this investment frenzy poses to both individuals and society, and what advice young people should keep in mind when investing. But beyond the excitement and success stories, there are also growing concerns surrounding this investment boom, like she just highlighted. So what are some major problems behind today's investing frenzy, Kyun?
You know, just what Professor said, I totally agree with her. And just to echo and just to add on what she just mentioned, you know, while debt-fueled investing can generate large profits, if the market continues to rise, the risks are actually equally significant when the market goes down. Like in the downturn, losses can quickly snowball, making it far more likely for investors to suffer substantial losses.
Mm-hmm. What are some of your take on this?
Yeah, again, just as Professor mentioned, you know, intensifying investment frenzy is sharply devaluing the traditional labor. So ultimately, the widening gap between the rapid capital gains and the stagnant wages accelerates the social inequality, threatening the very foundation of a stable society. So we should be careful with this.
That's why many people are looking into how to invest more smart. So what does then, to close off today's discussion, investing wisely look like?
It's a tough question, but it's something we all need to look at as young people as well, looking toward our future. I think debt-fueled investing poses ripple effects, and it may end up harming your health both physically and mentally to a point where you actually cannot go back. Now, once you switch your brain to like a gamble mode, kind of, you step away from reality and start betting on high risk, high return stocks or options, which usually ends up in big losses. Now, people have earned big money through investing, most probably through a lot of trial and error. So I think everything takes time. So take it slow, step by step, and gain a lot of knowledge first before you just jump on the bandwagon. Just because everyone else is making money, it doesn't mean you're going to make money as well. And just you need to really train yourself mentally as well when you go through, I guess, big losses.
I think that's very sound advice. What's your advice?
Pretty much similar what Kyun said. There are no shortcuts. Just you have to really study hard. Do not rely too much on the luck or the rumors. It's just you really have to study and see it as a long term.
Right, so today's investing boom really reflects not just the desire to make money, but also the pressure many young people feel about their future. While investing can create opportunities, experts say managing risk and avoiding emotional decisions are the most important than ever. And whether you're all in on stocks or still keeping your money safely in the bank, one thing is quite certain: everyone seems to be watching the market these days. And that brings us to the end of today's episode of News Generation. But News Gen will be back tomorrow at 10:30 a.m. Korea time with more stories and discussions. A big thanks to Kyun.
Always a pleasure.
And also Moonju.
Thanks for having me today.
For coming in. To our viewers, thank you so much for watching. And hopefully your stocks keep climbing so your stress levels don't. We are News Generation.